Hello traders, welcome back to my channel. Today I will be explaining an NQ short setup that happened on the 25th of August. Like usual, I will go down from the higher time frame to the lower time frame. I will be explaining how I determined my bias for the day, key liquidity points that I mark on the higher time frame, and all the way down to the 1 minute entry. If you are one of the viewers that keep watching my videos, you will notice that this was one of the easiest setup that I have uploaded in some few days. So without further ado, let's start. So as you can see, I'm on the 4-hour time frame, and how I determine my bias is very simple. So price here made a break of structure to the upside, and I have marked this 4-hour low here as 4-hour major low. Once price went below that line that I have marked, my bias turned to bearish. Now I have also marked a 4-hour point of liquidity here, in which when price retraced and went above and took liquidity, a bearish move was done, which I will circle here for you to see that bearish move. So once I saw that that bearish move was done, I just looked to keep on shorting the market. So that is a very simple explanation how I determine my bias and why I take my shorts. So today I will be explaining this price action movement here, which I will circle for you to see. This price action movement here. So right now I'm on the 4-hour time frame, and the only thing that I will mark is the key liquidity point that I'm interested in this time frame, which is this one here. I will mark it, this point here, which is a 4-hour key liquidity point. So prior that I have marked that, you need to notice as well that here a break of structure, so price can continue to do the bearish movement was done as well. So once that was done, I switched to the 1-hour time frame to see a more open price action and to see if there was any key liquidity point that I have to mark as well. So we are on the 1-hour time frame, and as you can see, I have marked this point here, this point here. So that was one of the liquidity points that I have marked, and I have waited for price to go above so I could take the short. There was other key liquidity point which I have also marked, which was this one here. Let's name it 1 hour. But of course, as price didn't go above that, and I will not be using and explaining nothing regarding that point, I will delete it, but just to let you know, that was still a good liquidity point for you to mark. So once I have done this, the only thing you need to do is to wait for price to go above the liquidity point, and then you go on the lower time frame and see how price folds, see how the boxes get ticked for you to take the short setup. So now I'm going to the 1 minute time frame. This was a very simple setup. So yesterday, this is the 4-hour liquidity that I have marked earlier. So as you can see, I didn't take any trade in the London session. I will plot the fib just to explain. So once price went above that liquidity, I waited for the bearish movement to form, which as you can see, it formed. And then I have plotted the fib to mark any liquidity above the 61.8. So when price goes above that liquidity, I will take the short. But eventually, as you can see here, price only made bullish candles, so no setup was taken. Also, after that movement, I stopped looking for any setups because, of course, another bullish move was done here. So price then started to go higher, and eventually it went above the 1 hour liquidity that I have marked earlier. So as you can see, price here did a bearish move, but in that bearish movement there were no bullish candles for me to mark the liquidity. So when price goes above that point, I will short the setup. So we leave it like that. We just you need to just notice that then price started to retrace, and then it made a bearish leg, this one here. Now you need to take note of this price action movement here. Why? Because this price action movement here, which is like a zigzag, is just only noise. It is there to trap you, so you take a trade and eventually you will get stopped out. We don't look to plot any key liquidity above the 61.8 when we plot the fib and mark those points, because eventually you will end up marking loads of points. Like, to give you an example, like this, like this, like this. So you got my point. So that noise, you need to remove it from your mind. When you see it, you just don't plot nothing from there. And I'm telling you this because yesterday there was a person who messaged me and plotted some liquidity from there. It's okay, he's still learning like everyone like everyone else, no problem. From our mistakes we learn. I keep learning every day. But because he sent me that, I need to really point out that when you see price action like that, you don't plot any liquidity from there. So like that, you will remove any more trades that you will take, and you just go for the good ones. So when I saw that price did this bearish move, I immediately plotted the fib from the high to the top, and the only point that I was waiting for price to grab a liquidity from was this point here. That was the only point that for me was really interesting, which really caught my eye, for price to go above, and then if it offers me an entry, I will just take the short. So after that retracement, after this retracement here, price again did a bearish move, which, as you can notice, again it did an inner market structure shift, or let's say an inner break of structure, because it went below this low here. So the fib will need to go a little bit down, and again now we need to mark the new liquidity, which is above the 61.8, which at that time I have marked this point here with which I was a little bit shaky as well about it, but I still marked it, and just said to myself, like, I will wait, see how price folds, and then I will go with the flow. But eventually price, when it went above it, didn't give an entry, so that we don't take any more note about it. But the point that I have marked earlier, this one here, which I have explained a few seconds ago, price went above that point. as you can see. Price left an IFVG open as well here, and afterwards, after price went above that, the IFVG was filled with a bearish candle, and that was my entry. The stop loss goes at the high, and the take profit I have set it like usual at the 2.5 R. So it was a very simple setup. If you kept following my videos and you're trying to learn about this very simple setup that I keep using every day and which I post every day, this was, I think, one of the most easiest setups for you that you could have taken. So for today's video, that's all. Just a quick recap like usual. Decide the bias for the day, mark key liquidity points, wait for price to sweep them, and afterwards turn down on the 1 minute time frame for your entry. Once it ticks all the boxes, you can take the short setup. So for today's video, that's all. I hope that you liked and enjoyed the video. If so, please leave a like and a comment, and I see you on the next one.